All right, everybody, we are back today with Gareth Soloway, Chief Market Strategist of In the Money Stocks. Gareth, good to see you again. How you doing?
Hey, I'm doing great, Greg. Thank you for having me back.
Yeah, it's funny, every time we talk, there's always a big price action in Bitcoin. I had no idea. I scheduled this yesterday or the day before, and then here we are on Friday, October 22nd of 2021, and we've got some big price action on Bitcoin. So why don't we just jump into that first and see what's going on, and then maybe you can tell us a little about Dubai and the Bitcoin conference there that you just came back from, and whatever else you have on tap today.
Absolutely. So we all know Bitcoin made a new all-time high just a couple days ago, basically. Now, I did pull the trigger on a short when we were above, and there's a record of it on Twitter. I posted it on Twitter the second I did it, timestamped and everything. I shorted at 66,100. So far, I'm in the money almost 10%. Now, this is a key, right? Now, when I did this short and I posted it on Twitter, a lot of people said, oh, you're crazy. It's a break of an all-time high. But one of the things that the average investor doesn't understand is the manipulation that goes into price breaks. So what I mean by that is if you look at a high pivot and it gets broken, you're going to get max amount of bulls to jump in at that point. Everyone's going to swing wildly to the bullish side. Institutions know that. So there's an incentive for them to break major high pivots, just like on the downside low pivots where you're going to get a freak out and the max amount of bears. And the reason they do that is because there's going to be volume that comes in there and they can unload into it. So I use what I call the confirmation signal, which is a secondary close above the breakout candle high to really tell me whether or not it is a real breakout or a fake out by the institution. So you can see clearly right here. In fact, let me zoom in a little bit more so we can even get closer on this. You closed above, which is okay. That's could be the fake out. What you look for is the next candle afterwards to close above that highest pivot. If it does that, it usually, and I say usually because there's always a caveat where it still could, but it usually is a true breakout if it closes above that, because institutions don't want to put too much money behind a play they're looking to have reverse. So if it gets that confirmation, its chances are, odds favor that it is a real breakout. Well, we clearly saw that Bitcoin then had a reversal candle, which negated the entire breakout candle here, and we've continued to fall down. Now, I'm not looking for a massive collapse here. My thesis, and I know I talked about this with you prior, was that I only thought Bitcoin would go to about 52,500, give or take. And then I thought it was going to repeat the cycles from 2013 and 2017. Just the mere fact that it broke the high means that you can't compare it to previous cycles. Now, it could be a new cycle where we're having a double top and then we roll over massively. But basically, I'm back to the drawing board in terms of looking for where it's going to pull back. So the short for me is a very short-term trade. I'm probably looking for a pullback to about 57.5. I'll then take that percentage gain and I'll reevaluate. I'll look to see, does Bitcoin start to move back to the highs? Does it confirm, or do we break that 57.5 and pull back? But really a fascinating turn of events for Bitcoin here on the chart. So it's always keeping me on my toes, and it is a fun thing to trade and watch.
Yeah, it's tricky. Let's go back to your chart real quick. I want to ask a couple of questions there, because your original thesis, the scene of the crime, which is the neckline of the Head and Shoulders where it broke down, Bitcoin did, break through that and then confirm and continue, like you're talking about, what we're looking for now for that all-time high. And then back in July, down at the bottom where our July low came in, we had that where we did not get a break of that resistance and confirmation and continuation down. It actually faked everybody out and broke up, and everything pointed to more downside there. And then what did we get? We got that rejection and then continuation up, which is what you're looking for on the all-time high trend line now.
Right. So you're exactly correct, right? So you had this pivot low at 30,000. You then faked people out by breaking that here. And again, that basically took out stops there. The institutions were fully intending to do that. And instead, what do? They ripped it up. So as soon as they took everyone's money who stopped out there, they took it the other way. They even did it again over here where it broke briefly 30,000. And you got even more people to say, okay, well, this is definitely going lower at this point. And then that point, they ripped it up. And then you could see this trend line here, hit it here, hit it here, hit it here, here, here. And then this is where you confirm it right in this range, right? So right here, you confirm. Look at how you retest that support. When you confirm above a level, that level now becomes support. So it was resistance here, here, and here. And now when it goes up and comes back, support. support, and bounce to the upside. Then we came up to the scene of the crime. We closed above it, closed below it, closed above it, and finally confirmed, which signals a move up to the next level. What's the next level? Your all-time high double top. And here you didn't confirm, and you then reversed to the downside. So the confirmation signal is something I created. It has served me amazingly well. Nothing's perfect, but it gives me a good indication whether or not is a true breakout or a fake breakout. And you might say, well, why are you looking at the 57.5 level, right? Well, take a look at the scene of the crime, right? What did I just say? I said confirmed break of resistance now becomes support. So where is that line, that scene of the crime? That's right there around 57,000, 57.5. And therefore that should actually be significant support on the retrace here. So it's all technical. Everything I'm doing is technical based on the methodology here called the PPT methodology.
Yeah. So, and what we should be looking for right now then is a test of that 57,000 level. If we bounce and continue up from there, then we may have the full, we put in a higher low, and now we've got a true higher low. And now we've got, trend reversal versus, putting in what would be a lower higher low, which is what we've done so far. We haven't put in a true higher low yet. We do have a higher high, but we don't have that true higher low yet.
Yes, correct. And same thing. So if we bounce off 57.5 or so, then what I'll do is you basically, I would cover my short there and go more into a neutral stance. And I'd look to see if we get back to 65, do we confirm above 65? If you then confirm above 65, then you have to start doing calculations. You can do fibs, you can do different things to try to figure out where that next resistance is it going to be? Is it going to be 70, 75, 80, 100? I mean, who knows at that point where it could be? Or do we get below 57.5, confirm to the downside, and now you're starting to look all the way down to the 40,000 level as a potential next support? So it's really just, I liken it to either table tennis or ping pong or pinball, where you're just playing the support resistance lines. And that's kind of the cue, which side of the market as a trader to be on or which side to look for.
Yeah. It's Bitcoin is tricky. It's I would say the bipolar test is what we've got going on there.
And if I could just say this is a really important point, folks, is that this is something at the conference I talked about in some of my live interviews and my presentations, but there was an incentive to push Bitcoin up to the all-time highs going into this last week. And the answer to that is that it was the launch of the ETF based on the futures, right? So if you go back to when the futures themselves launched on Bitcoin, there was the same type of push up where the institutions that were launching the futures, you don't want to launch a product when it's tanking, right? I mean, that just goes, you want it to be popular. You want everyone to want to get into it. So you want to push it up. So you're going to create this FOMO. You're going to push price up, break key levels, and get people on board. And what's interesting is within a few days of the launch, you could arguably say, okay, the institutions say, okay, the launch was amazingly successful. Now we don't care anymore. We're not going to use our own money to prop this thing up anymore. So now we'll step back. And what does price do? It starts to come in. So again, it's kind of suspicious about how it all happened. Doesn't mean it's not going to eventually break higher. You guys know I'm a long-term bull. I just think that price is probably a little too extended at this point, but it is suspicious in my opinion.
Yeah, it's obviously, definite, obvious manipulation. All you have to do is just look at the price action, which, all markets are manipulated. This one's just so much easier because lack of regulation. We saw that wick yesterday where somebody, did a market sell instead of a limit sell. And we saw what happened there. And for anybody watching that doesn't know what that is, you got to do a limit sell when you sell because you will be subjective to what the market pays as price is dropping versus selling at the price you want to sell for. So somebody got wiped out on that deal yesterday. And
that was now, where I think it went as low as, did it go as low as 8,000? Is that what you saw?
$8,000, somewhere around there. Yeah. 8,200. So, hey, I put a market order in, a limit order in at like 10 grand just to see if I could pick one up. You never know if it happens again. So I've got some orders out there at 10,000, what the heck. But really interesting. Now, another concept that there's a lot of debate on is double tops. So let's take a look at that and see what your thoughts are in terms of double tops, and a lot of people say that, double tops are only good 30% of the time, and that in a double top, the second top has to be lower than the first. So what are your thoughts and what are we looking for here if this is a double top?
Yeah, so I'm in the other camp where I believe that double tops are best served when you actually make a new high. And the reason why I like that is because it gets the max. So I'm a contrarian trader, right? So how do you get the max amount of bulls on board? By making a higher high here. And again, everyone, I mean, trust me, I was on Twitter and tweeting about this, and you wouldn't believe the nuttiness out there over this break point when we took that out. So this is a classic double top at this point. But the key about double tops is this, is you don't know if the pullback is going to be significant or it's just a shallow pullback, let's say to 57.5 before it moves back and breaks out. The one thing to keep in mind is that the best pullbacks come off of double tops. When you get a triple or quad top, meaning you go back up and hit it again and again, eventually it is going to break to the upside. So again, if you're going to trade a short play, the best one is off a double top here. And to me, it fits that criteria pretty perfectly.
Yeah, it's really interesting. And what else is interesting too is that we saw the double top, same kind of time frame and action with the Dow recently. I mean, we peaked right just above all-time highs. Same thing with S&P, but not NASDAQ.
Right. Right. And I think from the NASDAQ's perspective, and let me bring up the QQQ chart here, and you can clearly see you're lower than that previous high, is I got to believe that that's partially based on the fact that yields are now nearing that 1.75%. So obviously we saw Snapchat warn yesterday on earnings, and it was just a debacle taking down Facebook and some of these other stocks. But I think also the yields, as people are now anticipating higher yields, maybe 2% in a 6-month period or so, there is money rotating into the Dow plays that are higher dividend players, the types of stocks that perform better under a higher yield system.
Okay. So let's summarize what we're looking for. Bitcoin, obviously weekends are tricky. So what are your thoughts on that? And then maybe we'll talk about, the traditional markets a little bit and then get to Dubai.
Yeah, so I'm going to look for the short to kind of play to the downside a little bit here. Again, 57.5 is your key level of support. That's really where I think the stand for the bulls has to be made. They can still fight that level and bring it back to 65 and maybe break it higher. But again, to me, that is the key standing point. I mean, that's the last stand, if you will. If it starts trading significantly below 57.5, I do worry that it could retest the 40 level. So if you can hold 57.5, I think you look for a potential retest of 65, maybe confirmation for a leg higher. If it can't, watch out below. My guess is you'll test that 57.5 over the weekend.
All right. So what do you see in traditional markets with the Dow and the S&P? I know we had not a big, but we had a nice little correction there, and it looked like we were going to confirm more downside, but then we just reversed, and now we have this double top scenario going on there.
Yeah. So you definitely have on the S&P a beautiful double top right here. You can see the markets today are kind of struggling a little bit. It's not a big pullback, but it's kind of what you'd expect at a resistance point here. We did make a slightly higher high, just like Bitcoin. So now the question is, does it start trading back down just like the Bitcoin play did? This is where it gets a little trickier on the S&P 500, because going into today's move, we had lower lows and lower highs. Now we have a slightly higher high, but also a lower low. So think about it like this. When you have two of the same, the trend is very easy to analyze, right? It's in that direction. In the case of the market prior to today, it was lower lows and lower highs, so the trend had turned down. Now you have one that has flipped. Now flipping is basically a positive and a negative. So those cancel each other out, and you have to go as a technical trader into more of a neutral wait and see situation. So that's kind of where I am right now. At least on the S&P 500, I'm in a wait and see. Do we start to trade down, maybe make a lower low and a lower high again, in which case the downside starts to resume? Or do we have a shallow pullback and then make a higher high, in which case you could then say you now have higher lows and higher highs. But again, when you have one way and one the other way, they cancel each other, a positive and a negative, and you have to go more into a trading neutral stance until you get more information.
Yeah, and it's starting to shape up just like a correction, just like the rest of the trend has been so far. And I guess, expectations would be for markets to continue to go up for a while, but we're treading on thin ice, it seems like here, and more people are starting to talk about it.
Yep. It's so true. I mean, there's so many issues out there too, but again, the market has been resilient. It's interesting as we get later into October, into November, do we actually see the Federal Reserve start to cut back on that QE? Do they start to taper? How does the market react? And, a lot of people are saying the market is anticipating a $10 to $15 billion cut every month or two, starting in November or December. And the question again is, how does the market react? How do yields react? My theory is that with yields trading below that 1.75% high, the markets are kind of used to that. We were there, in April. Okay, this is kind of the same range. If we break 1.75%, everyone's going to start to panic about 2%. And that's especially where technology could see more selling to the downside.
Yeah, it's real interesting. I think, the Fed taper, that's already on the books. They're going to, I guess, confirm that in November. And it's minor. So it's not going to be significant for at least a couple of quarters before maybe 50% of that reduction is actually in place. The real key is interest rates, because inflation is well ahead of where they were thinking. And it's interesting. One of the Fed chairs came out the other day and said she's not concerned about inflation, doesn't think it's running much more than what they anticipated. But I think everybody else is realizing that inflation is, probably 10%, if not more, from an effective standpoint.
Yep, I agree 100%. And again, even the Fed is starting to admit it's not just a one and done type thing. I mean, we're going to be fighting the inflation bug into next year. That's what they're admitting now. And then I think they'll ultimately have to admit that it's going to be a longer term problem. And that doesn't mean we're going to be at 8 or 10% for multiple years. But remember, they want it at 2%. My guess is it runs hot at 5% for many years, especially with the labor costs going up. I mean, that is something that, my point is, if you're paying someone $10 an hour and you have to raise their pay to $20 an hour, you can't immediately raise a cost of a widget by that much. So you do it over the course of time so that people still will buy your widgets. You do it slowly, which then means inflation will just be consistently high for a period of time.
Yeah. And the bond purchase is one thing. The interest rates, that's the real catalyst. I think that's what we really need to keep our eyes on. I think all of the bond tapering is kind of getting priced in as we go along. The interest rates is what everybody's kind of watching. And that, I think that will do the most damage the fastest if they all of a sudden have to reverse course and start raising rates at any kind of a meaningful pace.
Yeah, I agree 100%. And I think the one thing I would say in regards to interest rates, what people should be really focused on is like the price of gold has held up remarkably well. So one thing I want to just point out here is, I've been generally someone who's a longer term, very bullish on gold. And if you look at the GLD, I mean, over here, interest rates were very low, which usually means that gold would be high. And as interest rates move up, usually gold fades. But what we've seen is gold's actually held choppy sideways as interest rates have soared back to this 1.7%. And I think that is a good indicator that gold is starting to anticipate the inflationary thing, which again is a longer term bullish thesis for the gold price. So again, I continue to be very positive on gold, even though it honestly hasn't done a whole lot over the last 6 months or so. It to me is pricing in, or it's starting to show us what we want to see in terms of interest rates going up because of inflation is actually a bullish case for the gold price.
Yeah, it's fascinating. And obviously Bitcoin and cryptos have, stolen a lot of liquidity from the gold markets.
Yeah, it really has. There's no doubt about it. What'll also be interesting if we start to see kind of a bearish tendency to come into Bitcoin. Does money rotate into gold, or is that money kind of the quick profit money that might overlook gold in terms of saying, oh, well, maybe gold goes up 10, 20%, but I want the next hit of 50% in a very short amount of time.
Yeah, it's really interesting. And, with the crypto cycle, the way the money rolls, obviously Bitcoin, then Ethereum, then large cap, then small cap, that's kind of been the rotation in the market. Bitcoin tops, shortly after that, Ethereum tops, then large caps, then small caps. We're kind of seeing that in a small way right now. When Bitcoin's momentum, tapers off, some of the other coins are running, not the entire altcoin market yet, so we haven't seen that alt season like, everybody's looking for, but, it'll be interesting when, that does occur. And, if we're starting that process now, and a lot of it depends on what Bitcoin ends up doing.
Yeah, so true. And you're right about that. I mean, like Cardano really hasn't run. I was posting a chart today about how it's just basically holding in a wedge pattern. It hasn't broken out. It hasn't broken down. But then if you look at Solana's almost back to the all-time highs that it was at, not too far back. So yeah, it's a very selective crypto market right now, which, I'm trying to read that. Is that a bullish thing or a bearish thing? The fact that money isn't just pouring into anything, does that mean that the trend is not as strong for crypto? And again, it's something that I'm just continuing to watch.
Well, in the past, it was all of them. So you could throw money
Yeah,
at anything and just boom, everything went up. Now, here, it's just one or two here or there. Sometimes the same ones over and over. They rip up to all-time highs and then they drop back down
yep,
50%. Then they go back up, 25 or 30. Then they drop. So it's really interesting to try to figure it out. And really, it's what the Bitcoin run. As Bitcoin goes up, some of those will go down, but some will run with it. So
yep.
it's really interesting. But if Bitcoin really, really decides to go down, everything's going down. Almost
Yes,
nothing else will run. And
that's
we're
right.
not really seeing anything meaningful in Bitcoin right now. It's just your typical, little retracement, put in a higher low, and then continue marching on. The question will be how far and how fast. And I told you about the Plan B stock to flow model. I don't know if you've studied that, but price seems to be following that pretty good.
Hmm. What was the October high projection from him?
63 was the
63
floor. 63 was the
floor.
floor. And I don't think anybody's looking at his, top end of the spectrum these days because it hasn't even come close. I think we're supposed to be well over 100 right now on the mid level to top level of his stock to flow model. But 63 is what he's projecting for a close this month. 98, I think it is next month, and 123 or something like that by the end of the year.
Yeah, it'd be fascinating come the end of the month. We're only about a week away now to see where it does. Does it creep back up to 63 by then? I mean, it very well could. It's close enough. We know that. But then the other question I would have is so many people are basing their decisions off of it. If this is the first month in X amount of months where it doesn't, does that create an added sell pressure to Bitcoin? I don't know.
Yeah, it'll be interesting. So the question is he that good, or are, the manipulators using the model to, bait people? So
Right.
it really doesn't matter. And the thing about manipulation, I mean, all markets are manipulated. The
True.
key is to be able to spot it, understand it, and roll with it.
Right.
And I mean, that's me. I'm an opportunistic investor. I'm not a chartist. I'm not a technical analyst.
Yeah.
I look for the lows and buy low and sell high, and I'm in and out, on
I
not
always
daily.
say, I like, I admittedly am the feeder fish that attach themselves to like the great white shark. The great white shark is the Goldman Sachs, the JPMs that are making billions and billions of dollars. I'm okay with their scraps because it means millions to me, like we don't have to we just follow them and let them attack and kind of do their thing. And we'll just take the scraps along the way. And that's more than enough for me.
Exactly. And that's a trader's, investors, opportunistic investor perspective, just like real estate, anything else. But if you're a long-term holder, then it really doesn't matter. You buy, you hold, and,
True.
hopefully it just keeps going up over time, which, all of the fundamentals, show that it will and that it should. And then you're going to have your peaks and valleys along the way, with the manipulation so that the institutions can make their money and, the banks can make their money. And what we see here recently, all the banks had record earnings. They all have crypto trading desks,
Yep.
so it'll be interesting to see how that broke down, where their earnings actually came from.
Yeah, absolutely. So true on that.
A lot of fun, a lot of fun. So tell us about Dubai. What was your takeaway there? And did you get in the ring with any of the maxis?
So Dubai is an awesome city. I mean, first of all, I'd never been there, and just kind of a mix. I'd call it a mix of Miami, New York City, and Vegas. Just incredible buildings, just an incredible city, incredible food, and the expo, the summit, the Future Blockchain Summit was just an amazing thing. I mean, we were just in one massive hall for cryptocurrency, the blockchain portion, but there were 10 other halls with major things in it. So really an amazing undertaking. And I loved being there. I loved presenting to people there. They were so excited to kind of delve into the psychology of trading. And again, there were so many people there that were just like, Bitcoin's going to 500K. That's it, And here I come in where I'm saying, yes, long term, I believe it's going to 500K, but you have to utilize the charts to tell you, at least in the short term, where it could go, because there's a lot of people who still have money on the sidelines or will be making money where they can invest it into Bitcoin. So if you can kind of time the dips, you can actually get great entries for the longer term move on it. So it was just an amazing experience. And I'll likely go back and present again next year.
Yeah, that's awesome. And for me, I always tell, obviously you want to know the dips and the bottom so you can, get in at the right price point, but it's really more important to know the top than it is the bottom, because even if you're a long-term holder, I mean, everybody's holding for a reason. Okay. You need cash, you need dollars, to survive. You can't use your cryptocurrency for everything everywhere yet. So, at the end of the day, people have financial goals they're trying to achieve. And at some point we all liquidate. So you want to do that at the best possible time when you can, not at the worst possible time when you have to. So,
Right.
it's really important to understand these tops, and there's nothing wrong with, selling it at cycle tops and then buying in. I mean, if you gauge that over the years, I mean, the wealthiest investors of all time, that's how they play the game.
That's
They
right.
sell, buy more, compound, as you go along. And as a real estate developer, in my career pre-cryptocurrency, I mean, I don't do a lot in the crypto space. I mean, a little bit, very small portion of my portfolio is in cryptos. I've primarily been real estate and equity, capital investments over my career. And, same kind of thing, you buy a piece of real estate, you add value, you sell it to go buy more. And then, it's the one, 4 greenhouses for the 1 red hotel, and, that whole model.
Yep. And you're so right about that. I mean, just thinking about it, a lot of people will say, well, what does it matter if I buy at 65 if it's going to go to 500? Well, if you could buy at 30, if you can buy one coin, let's say you have 65,000, or let's just say 60,000, one coin at 65,000, but instead you buy 2 at 30, and then it goes to 500,000. In terms of dollars, in terms of what you make, I mean, that's a huge difference. I mean, basically it's a doubling of your money versus what you would have made. So again, most people can't read the charts, but I do think it's worthwhile, if you can, to utilize them appropriately to make the sells at the highs and rebuy at the lows.
Yeah. And then you're compounding and you're increasing your portfolio as you go along. And that's why the whole cycle with altcoins, back and forth, a lot of it's to create more Bitcoin.
Yes, 100%. Absolutely.
Yeah. Awesome. Well, Gareth, I appreciate you taking time out today and sharing your wisdom with us. As always, it's been a great pleasure, and I hope you have a great weekend.
Hey, thank you, Greg. Thanks for having me as always. Appreciate it.
Absolutely.